What's happening, guys? Another Sunday scan coming at you. This time it's for May 17th and the week ahead. About a year ago, on the 18th, my son was born and the market started going nuts. That's why I've always called him the golden child, because it completely changed a lot of people's lives from that point forward. I started to notice that it started to pick up in May, and just the opportunities for me personally, as well as many of the people that I trade around. Just completely changed their lives. And so hopefully it continues. It still has. It's still been super, super aggressive. Even these big pullbacks. A lot of the overvalued names are coming back. The ones that, really had no business where they were. They've come way apart. But the market's still at the highs. Even this past week when we pulled back a lot, we're already pushing back up towards the 420s, which is, amazing. Nobody sells. And that is something to kind of take into consideration, because, there's a lot of indexes and a lot of funds that just hold stock. They don't sell. And so when this big pullback comes, like this past week, we were down 1%, and I don't remember the next day, maybe another couple percent. But the reality is it's not that much, but there are people blowing up because they're taking over leveraged positions and things like that. So you always need to be cautious with margin, cautious with leverage, because the market's always going to try to figure a way to get you out, right? And so I just think that, be super, super cautious. Don't get too biased in this market. And as you've seen, it's been just absolutely phenomenal, giving opportunity. If you are acting as a trader, if you're trying to take big picture trades and kind of figure it out, where it's going to be next week, you're probably getting chopped up. And it's just not that kind of market. You need to understand, when are you patient with swing trades? When do you let things go, multiple days? Or when do you act as just a trader intraday? And I think that we've had that the last couple sessions where, it's better probably just to be a trader. Nail, bail, get on with the next. A big reminder, next Saturday. And I know it's getting nice out. I know masks are coming off. I know things are starting to open up. But we've got the Traders for a Cause event. And I do realize that it's probably the last thing you want to do on a Saturday. We will be recording it. So the point that I want to make is make sure that you're on the list. Even if you don't think you can make it, on Saturday, we're going to record the entire session. So everybody that does sign up to that list will get information about how to access the replays for Saturday. Let's see. Another reminder, just in case you need it. Obviously, there's always new people that are watching. We don't solicit you for anything. So if you're getting hit up on WhatsApp, if you're getting hit up in the comment section, if you're getting hit up on Instagram, Facebook, you name it, that's not what we do. So you can assume that it's not me. You don't have to DM me, ask me if it's me. We tweet all the time that we don't do that. So just in case you are new, in case you need that reminder, in case you didn't know, we're never going to solicit you for anything related to cryptocurrency. We're never going to solicit you to manage any capital at all. So anybody that replies to you in the comment section, just report them. Even if it looks like us, right? They upload our image, they upload my image, they pretend they're part of us. They name their page the same, and then they reply as an admin. They put an emoticon on there that looks like an admin, but it's not. All right, let's see. As usual, please leave a like on the video and your key takeaway. As you know, I always like to give away things, so we'll do that in a few minutes. I think that, right now, SPY and VIX, SPY's been offering some fantastic opportunities, right? It started to pull back. A lot of things started to come back with it. Volatility goes up. No, VIX is not the opposite of SPY. A lot of people get that confused just because typically when the SPY pulls back, we're trading VIX. But VIX is a measure of volatility, and it's an instrument off of that. And it's leveraged, and it creates just massive opportunities when, one, the market starts to go nuts on the downside, but more importantly, when it starts to correct, when it starts to go sideways or up, even if it doesn't go back to highs, even if it doesn't go up a lot, once the fear factor's gone, once the volatility starts to close, we have these really nice unwinds on stuff like VXX. So we had some great trades on that this week. As far as market timing, you guys saw the SPY comments on Twitter and things like that. Hopefully they were helpful to you. Couple questions or a couple, I guess, talking points that I had, and then I'll get into the questions that you guys sent in. What is a trader's market? And, for right now, I think that, forget the whole, holding overnight kind of things. Yes, there's some great swing trades. Don't get me wrong there. But, don't make, yesterday's trade a problem tomorrow, or today's trade a problem tomorrow. I think that being patient off the open, I've been taking some trades 7 to 8 a.m. like I've been talking about, but then I'm just kind of hands off and I wait for things to exhaust out. What do I mean by exhausting out? If you start in too early, whether it's the short side or the long side, you're going to second guess yourself and you're going to kind of work yourself up like, am I right? Am I wrong? Am I right? Am I wrong? And you're going to continue to go back and forth and just exhaust yourself out of the trade, and then the trade happens. So the key is you don't need to be that first person in. Let the trade kind of set up. It's okay if you want to dabble. I like to dabble. I like to start in. I like to take a starter position. But I'm not going to waste a bunch of energy trying to figure out where the bottom is or where the top is. I'd rather let that come in, show me, confirm to me, and then get a piece of what's happening. Because right now, with the volatility, the liquidity, there's no problem with sizing. I can size to, quite a bit more than I normally would. And so because of that, I don't need to get the top. I don't need to get the bottom. I can react to it. I can start in and then use that as a scaling technique, but I don't even need to do that. I could just wait for it to turn and join the trend. 9:45, 10 a.m. plus, if you throw that into your, kind of daily routine instead of trying to figure out everything off the open, I think that you'll have a lot more clarity on names because things are very emotional off the open. Sometimes we tend to try to figure out a trade off the open and then try to force the trade the rest of the day. Meanwhile, if you had traded the open to 9:45, 10 a.m. with a different kind of outlook than maybe 9:45, 10 a.m. plus, you'd be in a different situation. So what else? Market correction and recovery, my thoughts on it. That was a popular question. Personally, things can keep on going. I always have in my mind that maybe we end up coming back towards 380s and retest that level, consolidate for a little bit. I don't know, and it's our job that, for me, it's not my job to know, right? My job is to react to situations, react to volatility, react to whatever happens on a day-to-day basis. And it could look like it's going to 380 one day, and then the next day it looks like it's going to 420. And if you notice, those are actually the best times to act. When it looks like it's going to go to 380, that was a great buy. And now it's almost back to 420s. So is the breakout on 420 the best short? We'll find out. But we have to wait. We have to be proven. But for me, and what I'm thinking is these resets are extremely healthy, right? It gets out all the over leverage. It gets out all the people that, have no idea what they're doing. And, there was a lot of products of the bull market. There's a lot of products of SPACs. These all went nuts. They all gave people the false sense of conviction, the false sense of understanding, the false sense of confidence that they knew what they were doing, and they don't, and they're finding that out the hard way by cutting their accounts in half right now. And then they'll do it again trying to make it back, which kind of goes back to all the warnings that I've talked about for quite some time now. So you never know what you have until you lose it. And so the point is if you've done extremely well, keep your money, relax, try to find out what you're good at. Don't try to trade everything. All right, so let's get right into the giveaways, and then we'll get into the questions, and we'll get right into scan. So first and foremost, I'm wearing my Icon Meals shirt again. As you guys know, that's who I use. It's consistency, right? You've got to be consistent with workouts. You've got to be consistent with, eating. Otherwise, you're going to not have the energy that you need in order to make this career work. Sure, you can trade, but you're going to feel awful at the end of the day. Consistency gives you that energy and that clarity in your head. And, for me, I've been through multiple, meal prep companies, and as I said, Icon Meals is the best. Todd had reached out to me a long time ago that said, "Hey, give us a shot," because you mentioned meal prep in your Sunday scan, and that's actually how we met. He said, "Give us a shot. I think you'll like us," and he was right. It was the best one. So, and since that point, he's allowed me to give away a box of food every month. So, Adam Lake, you've got the box of food if you're interested. As long as you're in the U.S., that's all. The Icon Meals is just going to be only for U.S. Folks. If you're not in the U.S., we'll ship you a shirt. We can do other things as well. But other than that, T-shirt time. Roman Sterling, you've got the T-shirt for this week because you're about as sarcastic as me. Because usually I start these scans and I say this one's going to be short, and then it's longer than all the rest. So I do appreciate that. But hey, what can you do? I try to keep them minimized as much as I can. And then last comment is Avidity Fitness. I haven't mentioned it in a while. If you guys need that little kick in the butt to get involved and get active again, give it a shot. I do it 4 times a week with Zach. But anybody that's interested, just DM me or DM Zach, which is Avidity Fitness. I'll have it in the scan. But there's me, a bunch of other traders that are actually doing this every Tuesday and Thursday at 6 p.m. and every Saturday and Sunday at 9 a.m. So it really does help kick things into high gear. Just like I said with the food and the meal prep, it's all about being consistent in all aspects of life, not just one. And the more consistent you are, more structured you are, in my opinion, the better trading you're going to have as a result. And a friend of mine, TJ, just recently DM'd me, and he started becoming more active, working out and eating more regularly. And then he showed me a graph of his P&L, his graph of his percentage return, and he said basically coincidence ? I think not. So I think it's really important. If you guys need that extra oomph, here it is, and join us. It's a lot of fun. So a lot of the questions that came in, great questions. A lot of people put tickers. I'm not going to field a bunch of tickers, but first and foremost, the staying familiar section of my scan. Some of you guys don't even see it because you just watch the video and you don't click through to the website. But I always have maybe about 10 other names that I just have on watch, and typically what I do with that is I put price alerts. I put price alerts so that it allows me to not focus on them, but not miss them, right? How many times do you see something you're like, oh, that's going to be a great trade. I can't wait to trade it. And then you look back in a week and you're like, oh, that's the one I wanted, and you missed it. So the price alerts allows you to not worry about it, and they'll alert you when you want to be alerted. And so I usually look at, where the channel is, on the daily, where the resistance is, where the support might be, and I alert myself when they either break different points or break down at different points. So that's how I use that section. And anytime a price alert hits and I don't really see a trade, I'll put another one in, a little bit lower, a little bit higher, just to kind of keep it on radar, because I knew or know that I wanted to trade it at some point. But for me, it's not just about a breakdown. It has to have liquidity. It has to have that edge for me to get in there. So first question that came in: discipline. Lately, I've had a harder time sticking to my plan and staying disciplined. Well, thought out trades with a plan have been overall profitable, but I find myself giving back more on impulsive trades and forcing trades. Proper mindset has been hard to have consistency. So Peter also mentioned that he had read David Goggins' book, and he needed to do a refresher on that. So if you haven't read that book, you should. Very good book. But look, we all go through the discipline aspect of things, and when we are trading super well, we have fantastic discipline until we don't. AMC on Friday was a good example of me having really good discipline, because typically, after I nailed the trade like I did on Friday off the open, typically I'd go back to it, and I start like, hey, I nailed it. I had a good read. I got that false sense of confidence, so I go back in and I start to try to maybe get that same trade off again, and it just doesn't happen. And so I spend the next couple hours doing a subpar trade, giving back profits. So for me, I've been super patient, waiting for those A+ setups, and that's it. And you're going to realize, just go and look at your trades, the ones that you prepare for, the ones that you are, really not necessarily excited about, but basically prepared for. Look at those versus all the other trades. Look how much time you're wasting, right? Sometimes we stick around and we make maybe 10% more on the day for sticking around those extra hours, or we also have that chance of giving back half or all of our profits, right? So what's better, 10 or 20% more for the risk of losing half or all of our profits? I don't know. So once you do that a few times or a lot of times, you're going to start to kind of have that conversation with yourself. What am I doing here? And, the sooner you treat it like a business, not a hobby, and get to it and only trade the top setups, the better results, the better consistency, in my opinion, that you're going to have. Brian, how about the theory of psychology of support and resistance and why they become key levels? Example, trap shorts covering, longs exiting positions when their risk levels breaks and every pop gets sold. Also, how stock gapping up or down changes its setup and behavior. So the psychology of that, that kind of trade is really the easiest way to explain it, and maybe not everybody can do it, but the easiest way to explain it is pretend that you're on the other side of the trade, right? When you're short and you're adding short, where would you panic cover? Where would you freak out? And when that happens, and when it tests that level, that's where I want to start into my first entry. I don't want to be, trying to figure out the top, and then when everybody else was bent, they're coming in for that cover. I don't want to be part of that. So that's really the psychological side of things, is going on the other side of the trade. You've been there before. We've all been on the wrong side of trades. Long side, short side, you're too early, and you just kind of hit that button. It's like, you know what, screw it, I'm out. When you're about to hit that button, screw it, I'm out, I like to wait a minute, see what it does, and if it confirms right after that, then I'm in. Then I'm interested. But what a lot of us do is we're right about to hit that button and we get in there, but then it ends up holding the opposite way that we wanted it to, and then we're in the same position as everybody else, right? So I've been super patient by letting it do one more confirmation, and Mosey is a great example of that on Friday, where it ramped up and it pulled back, and you have to anticipate the fact that, they're going to let shorts win for a little bit, but then they come back at it, and if it ramps and stuffs again, they're going to have a lot of longs on the wrong side of the trade, and that's where I want to participate. After it blows out a little bit of the early shorts, traps the longs, now you have twice the amount of longs on the wrong side of the trade instead of, just the first amount. And so, Mosey was a great real-time example about, I wrote out, I'm not looking for this trade, but the next point where it stuffs, where it breaks out and stuffs and fails, I'm interested in that trade. And that's really the I guess the psychological side of things. Kind of like where would you be if you had shorted that first move and maybe you got a little too heavy? Where would you be hitting that panic button for the cover? And once that happens, if you get the confirmation would be the volume, the stuff move, the failed follow through momentum, you name it. If you get that, then I'm interested. But if you don't, be cautious, because you're going to end up in the same boat as everybody else. And then also how a stock gapping up or down changes its setup or behavior. I particularly like stocks that, obviously we all want the perfect setup. Gap up, parabolic after a big day for a potential short, or gap down, flush out, like we had on Plug and FCEL, last week or the week before. I think it was the week before, where, it had a red day. Next morning, it gaps down, flushes out, and rebounds, right? That's the perfect goal. That's what we want. And the same difference with, AMC on Friday, gaps up, rips, reactor trade, slams down. That's what we want. But that's not always the case. Sometimes we've got EYES and LHDX. And those two examples were quiet leans. I was interested because most people would take them off radar because they gapped down. Everybody wanted to gap up. Everybody wanted more momentum. But I know that because I think it was Perry, P-A-R-I, I know most eyes are going to be on that one. They're going to be trying to nail that trade. Meanwhile, I'm going to be taking these ones that gap down for the ride down. And it's not as much size as something as, say, AMC, but what it does is it gives you the ability to let those trades work while you're working on other more active trades, while you're working on the AMCs, while you're working on the Perrys. You're able to trade these other names with a lot, not necessarily less volume, but less momentum, less eyes, and most importantly, I think less crowd. And that's why I call them quiet leans, because I just let it kind of do its thing and then quietly lean into it when nobody's looking. Psychology, I know you constantly speak about and tweet about it, but it feels like the biggest hurdle we face as new traders. Frustrating to know and not utilizing it. So again, going back to what I just said, I think the easiest way to explain it, to kind of maybe put it in your trading arsenal, is go back to every single trade that you've been on the wrong side, how you felt, and what that trade looked like, and what that moment was. And right about when you're about to hit that, screw it button, trying to keep it PG here, but once you hit that screw it button, that is when I am first interested. That is the first sign that says, all right, now I'm interested. But we don't have that confirmation until a little bit after, because it could have that huge candle and then it still holds support and takes on that next leg. I want to see it prove that it's going to fail if I'm on the short side. Same deal on the long. You could have that nice rally back, but what if it stuffs at VWAP and then continues to fade back? You don't want to be too aggressive too soon. So let it prove a little bit, and just the goal is always the meat of the move. You don't have to get the whole thing. All right, so had a great start to 2021, but I feel burnt out, suddenly unmotivated, lackluster, afraid to give back my own dumb past experiences, almost avoiding trading, don't want to just trade to trade, everything feels off, not sure how to get by these emotions. So I think that you probably are trading to trade, and make sure you're coming prepared. The biggest thing that I've done in this market is I don't care. You know what? I don't care if I'm going to miss a trade. I don't care if, I really wanted that trade and it's breaking down pre-market, but I know that if I chase that stock pre-market, then it's breaking my rules, and when it comes back up, I'm going to be more upset. I don't care about the loss. I care about the fact that I knew not to chase it down, and then it comes right back up before open, and I could have prevented that trade. So for me, it's, take the trade. Sometimes I always, when I was starting to build my account, you take a mental note of where you're at, right? So, let's just use 4K, right? 4K a day is $1 million a year, right? So if you know that you're a good trader and you make 2 to 4K quickly, how many times, if you're up 4K, do you give that back, right? Because you're up 4K. So you're like, yeah, you know what? I'm just going to take this trade because I've got this buffer. So for me, it's kind of like when I'm adding to a position, I pretend that I'm not in. Once you get to whatever your daily number is, not everybody has one, but once you're at a particular level, just make that mental note that, all right, I'm at X. So I'm at X. I need to treat this as the start of the day. And if you treat it as the start of the day, you're not going to be taking sub-quality trades. So you just wait for the next A-plus opportunity. And AMC, I think, was a great opportunity later on in the day, and that was all with patience. Patience, patience, patience. And I would have taken that if I was just sub-quality and there was no reason for me to touch it. All right, let's get into the scan, and thank you guys for the questions. As always, please leave a like and leave a comment. Put the timestamp. It'll help other people. All right, guys, this is the scan portion of the video, and this is where I go over my ideas, what I'm looking to do for the week ahead, and hopefully what it does is it kind of gets you prepared, proper mindset, and understanding what makes a potentially good trade and what doesn't. And most importantly, as you guys know, I'm not a financial advisor, so nothing is a buy or sell recommendation, and it's for informational and educational purposes only. If you're not okay with that, shut off the video and move on. If you're looking for somebody to buy, to tell you what to buy and sell, I'm sure you can find that online, but you're not going to find it here. All right, let's get right into it. AMC, first and foremost, looking left, right? We all know looking left. We talk about it all the time. So, situation like this. Thursday, it peaked out at the same level as the March highs. Friday, it peaked out at the same levels as the March highs. So that doesn't mean that it can't consolidate here and break through it, but you can take a very educated guess or assumption that it's going to have at least some trouble there, right? And so it did. And that is the looking left kind of thought process that I've talked about countless times on here. The other thing to understand is this action right over here where you can see this consolidation. We just saw this on Thursday. You can see how it had that peak. I'll draw a line on here to make it easy. But you can see how it pretty much had this exhaustion move, right? It's kind of getting all the early shorts out, getting all the longs in for breakout, and then just slams down. What you can see here is that you did not need to be first. And what happens is people get in there, they cover, reshort, cover, reshort, cover, slams down, cover. They cover on that first move and they miss the meat of the move. Well, imagine this. You don't try to find the top with size. Sure, you might start in there a little bit, but you don't try to find the top. You let it do its thing, and once it puts in that next high, then you've got the potential meat of the move still available. You're not exhausted. Now you can be a little bit more patient with the trade. Saw the same consolidation on Thursday. Once again, you saw it right here on Friday. Kind of draw a line right over here. You can see they exhausted people out of over the 1410 level, and then it pulled back. Once again, everybody probably covered the first move, rallies, lower highs, and unwinds. So the point here, the key here, is that you don't have to find the top. Most people get exhausted out with size, and they miss the meat of the move. The meat of the move is what you want. So, the goal tomorrow, higher the better. Weekends, in my opinion, are good for AMC and GME and all the other Wall Street bet type names. So, higher the better. Ideally, it comes back in and retests towards the Friday VWAP level. You know, if we're lucky, that would be great to get over 1350, some type of exhaustion move into that. But you know, we'll see what it brings. And if it has a weak open, it doesn't come off my radar. Just like we talked about on LHDX and EYES this week, we had great opportunities on the gap down. You know, when nobody was looking. Neo has been a fantastic trader. Nice steady rip, came back, retested towards the VWAP level. This is a great thing to kind of get used to, where it flushes everybody out under the VWAP, comes back up, covers it, and then or reclaims it, and then you can start to look for those dips versus the VWAP level as, you know, a good risk reward type of trade. So I'd be looking for either a weak open, potential breakout, and continuation, or ideally 34.50, 35, you know, squeeze out and pull back. What I would do is definitely keep an eye on the market overall, but more importantly, Tesla. If Tesla's breaking out, this thing's going to have more strength. If it's not, then, you know, you want to be aware. It was pretty heavy when Tesla was pretty heavy. Plug, what I would do on Plug, you know, a lot of people look at the PR Friday, they're like, ooh, good. You know, PR, they restated, everything's good. I don't think that that's why it was up. If you look at ICLN, you know, this is the ETF for, you know, what it's in, and for that particular sector. So you can see that, you know, it's pretty much the same exact opportunity, same exact trade. So I would not get too biased that, okay, PR is out, this is great. It's a sector trade, always has been, always will be, for the most part. FCEL, same deal. So I'd be keeping an eye on both, and when ICLN suggests that, hey, things are looking heavy, things are pulling back, then I'd start to look at Plug. But be cautious getting too aggressive too quick, because Plug has pulled back quite a bit, and it's probably got a lot of shorts in there now too. So I would love to see it continue to go, because the higher it goes, the better opportunity we have. But for now, it's going to be a main watch because it's been such a friendly trader. It's been great to us. And, you know, key levels for me right here, you can kind of see this consolidation level at 2470s or so. So 2450s, 2470s, something like that. I would be looking either for a base and continuation or peak out ideally and fade. But my goal would be we get a big gap up, ramps up through, I don't know, first couple hours of the day, and then starts to fade off later on. That would be ideal. MOSY. This one is what we talked about as far as catching shorts. So we had a huge first move. Everybody kind of tries to find the top, flushes out, and then they, think it's going to get heavy at VWAP, and it doesn't. It reclaims. So it kind of showed you its hand. And at that point, if it had stayed heavy, I'd be interested. But it didn't. It ramped back up. And then you can see that we had these big candles over here, too, where they ramped up and stuffed. Basically a stuff move is it goes into an offer, a hidden offer, a bunch of volume prints, and then the offer doesn't budge, right? So somebody exited without showing you their hand. And so at that point, it started to stay heavy. They tried it again, and then another huge stuff move, as you can see. And so that was the confirmation for me to scale in. You can see my trade from Friday, and I just left it alone after that. But fantastic opportunities. Another little squeeze into the close, pulled back, another squeeze again. So I think that we're going to have a nice unwind in the week ahead, but hopefully it gaps up a little bit. Hopefully it gives a better opportunity rather than just a gap down. If it just gaps down, again, that does not come off my radar, because as you saw with eyes and LHDX, there's still a big trade there. But most people will forget. PTON's always on there. I had a nice trade on Friday and moved on. The key is take the trade, move on. Don't look for, well, this should continue to fade. This should do this. If you get $2, $3, $4 per share and it happens fast, there's a good chance in this market that it's going to come back, right? So when we're range bound, when the market's kind of got a lot of indecision going on, this stuff flushes out, comes back, ramps up, comes back. So if you're trying to overdo any particular trade, there's a good chance you're going to get chopped. Continuation scan, Playboy, back at it. It was up 14, if you include after hours on Friday, it was up $14.50 on the day, which is insane. I put in the scan on Thursday night. I'm still there. I had taken some off pre-earnings just because I wanted to do the right thing, and obviously the stock more than doubled. But I'm still there, long term. And what I put on the scan on Thursday night for Friday, everybody's bearish. The stock, it faded back, but it was controlled, and it went back to the prior support, and it basically was hanging around 40s for the last couple of days. So anybody that wanted to sell, sold. Anybody that wanted to short is probably still short, and there is a good chance that they caught shorts. There really is. And I don't want to get too excited about this after hours move, because obviously it did have some volume, but we'll see what happens. But I've always been comparing this to QS, and if you go back and look at QS, that first move, there was a very similar kind of breakout, comes back, starts to go. Maybe we get that next squeeze, fails, and then we get the real squeeze. And that would be ideal, because just judging by the comments, the replies, you can get that kind of feel from Twitter, just to kind of get a feel for where people's heads are at. And there was no one left bullish. So let's see here. We've got VTNR. Whoops. VTNR, nice breakout here. And, this particular trade, I'm long. I got long on the first day. And the reason why, the first day of the move with the volume, and the reason why is because it felt like it should have pulled back. Felt like it shouldn't have, hung on. And what happens is when they ramp up, they pull back, and then they come all the way back. To me, that shows the demand. That shows, maybe this time's different. And obviously there was the volume, and then we had the second day. So, look, if this doesn't take on 2 and ramp to 220s, I'll be, heading out of the trade. But so far, so good. But that was a nice idea in the room last week. CLC still there. Hopefully we get some type of breakout soon over 28 or 30. Not much volume, but last but not least is all those staying familiar trades. So staying familiar is all about putting those price alerts, staying familiar with the charts, staying familiar with the moves, staying familiar with the sectors. That's what it means. So if you guys click through to the website, you'll see that I've got another 10 or 12 stocks. So those ones I will go and I will set all the price alerts for the week ahead so that I can go ahead and be alerted when that particular move happens. And that way I'm not missing the moves. That way I'm not trying to watch too much. Most of us try to do too much. The key is less is more. The less you have to do, the more you're going to actually benefit. And if you've set all those price alerts, you're going to be told when you want to know. And that's it. So that's it. That's what I'm prepared for. The scans have been a lot less prep as far as having an individual game plan, just because are we going to wake up to 500 points or down 500 points? Are we going to go 300 or, it doesn't, right now we don't know which way we're going to go. And so it's day by day for me right now. But what I want to know is where the liquidity is, where the range is, and I want to focus on those. And as long as they're trader friendly, I'm trading them. And that's it. Keeping it simple right now. If you guys have any questions whatsoever, reach out. You know the drill. Cam at Investors Underground. You can tweet me. You can ask questions. Whatever you want to do. Leave a comment section, and feel free to like the video. It helps us. It helps you. We're taking all those comments you guys leave, all those key takeaways, and we're putting them into smaller videos, which I'm sure you guys have seen. That's it, guys. Have a great weekend, and we will see you tomorrow in the room.